You are listening to the Marc Guzman Podcast Experience. Before we get started, just a reminder that you can find all of my available rental properties on my website at marcguzman.com. If you own investment property, click on the Owner Services section to see our complete list of services. This episode is brought to you by Beneked Commercial Real Estate. There's more to building wealth in real estate than simply buying and holding. You need to have an entry and exit strategy. You need to know when to invest, have a plan to maximize return during the holding period, and have an exit strategy to sell and exchange the property into a bigger investment. This takes a set of highly qualified professionals to guide you from buying your first investment property to eventually upgrading to the 100-unit complex, providing wealth for you and your family. Brian Beneked and David Peel have over 35 years of combined experience specializing in helping families build wealth through real estate. They assist you in putting your investment on autopilot and will guide you along each exchange. Visit them at www.bcre.co. Again, that's www.bcre.co to give your future a jumpstart. Insurance, the most important thing you'll buy with the hope that you never have to use it. Today on Highest and Best, we welcome back EJ Paje of Farmers Insurance to discuss various insurance and real estate matters impacting Bay Area residents today. This is a very great episode to listen to if you have any questions regarding your rental or home insurance policies. We also discuss the impact of the Rent Relief Act, Governor Jerry Brown's warning of an impending recession, and the recent passing to abolish the bail bond industry in California. Okay, perfect.
There you go.
Yeah, you have a DJ business, so you could easily do a podcast.
It's just, when you do these type of live events, like especially weddings, there's a lot of preparation that goes along with it. Mm-hmm. And sometimes you get these bridezillas and they're on you, so you got to constantly give them attention.
Yeah.
Yeah.
Do you ever run across groomzillas?
Not yet. I've had a few that basically say, hey, this is how I want it. This is how I want this thing. But let me pass on everything else to my wife or my fiance.
Yeah.
Yeah.
Yeah. That's funny. Stereotypical, right?
It's very true. There's different levels of bridezillas. It's kind of funny.
Yeah. I was talking to a videographer that did a video for my girlfriend's gym for their grand opening. They did this very fancy video, and so we were talking because they do a lot of wedding videos and very talented, but their big frustration is dealing with the bridezillas. Yeah, it's just so much work into creating this perfect video. And it's funny, like, how many times do people really go back and watch their wedding video? I mean, you might do that once or twice, but I feel like after
the divorce, you got to watch it.
Yeah. You have to watch it or not watch it. Usually after the divorce, you burn the tape.
Well, you watch it one last time, and then, you got to cut loose.
Yeah.
But you'd be surprised. So I follow a lot of my previous clients on Instagram, Facebook, and when we're friends. They'll post their, 1 year, 2 year, 3 year anniversary pictures, and they'll also include their wedding pictures, so they're bridezillas, because it's all documented. They want to look good. They want everyone to see these awesome, fun times on video, and that's why they're stressed out to make sure they capture all these special moments to the T.
Yeah. I feel the problem with that is you lose out on enjoying the moment. You're so worried about trying to make the pictures and the video so perfect that you miss out on the actual moment. But
that is, from what I've seen, very true.
Yeah.
Yeah.
And if you follow clients, I bet you see a lot of divorces.
I haven't seen one yet from the ones I've done.
Really?
Yeah.
Wow. I think it's like 50-50 of marriages, right? 50% end up in divorces, I think.
That is the statistic. But from what I've seen, I guess I've had good luck. All the weddings that I've been to.
It should be a marketing tool for you.
There you go. Yeah.
You want a long-lasting marriage, you got to hire EJ.
Or better yet, if you want to get out in 5 years, hire someone. No, that probably won't work out.
Hire someone else.
So, EJ, thanks for coming on to the podcast again. This is the second time, right?
Yeah, it is.
Yeah, first time you were on with Eric Myers, and we were just talking about Eric and He was on the podcast just a few weeks ago, maybe a month ago. But so I'm glad to have you back.
Glad to be here.
Glad to talk some more insurance, because I think insurance is there's not a lot of people that are out there educating people on insurance, right? And there's very limited info. It can get very confusing. Sometimes when you look at insurance policy books, I mean, you're looking at 30, 50, 100 pages, and it's just a whole bunch of legal. I mean, for most people, it's just legal blurred lines, right?
Exactly. So when I first got into the business, and I found that was the disconnect, was people didn't really understand what insurance is for and what it actually covers. So I found it to be a mission of mine to really decipher these languages that are, in a different form where it's all written by attorneys. So I wanted to make things simple for people, so that way I can present it, so that way people can really understand why they need it.
Mm-hmm. Yeah. So let's talk a little bit about the difference between commercial, home, and renter's insurance. And in fact, let's touch on renter's insurance, because I think that's pretty basic, straightforward, but there's a lot of people that don't know about renter's insurance, the types of coverage, what it actually covers, and why landlords should require tenants to get renter's insurance.
Absolutely. So renter's insurance is what I would call a policy to cover everything you've worked hard for, especially when you're renting. You don't really own much. All you really own is everything that you have in your apartment. So
the furniture, TVs, electronics.
Exactly. Any documents that you may have, family memorabilia, anything that you've collected.
$5,000 cash under the mattress.
Yeah. So renter's insurance, for the most part, for the renter or the tenant, it really covers their stuff. So at the end of the day, if something happened where you're in a place where you have high crimes, people break in, take your electronics. I mean, we see this on TV all the time. It doesn't really matter what neighborhood you live in, whether it's a nice neighborhood or maybe you're in the hood. You want to make sure that if something happened, could you bounce back and kind of pick up the pace right where you left off.
And not just with theft and break-in, but also natural disasters, right?
Exactly. So regardless if it's from theft, which really majority of the time is the case, it covers it for fire. With these fires we've had here in California, I mean, a couple places over in Oakland where apartment buildings got lit. Everything that you had was in your apartment. So could you afford to go back and buy all those things all in one day? How much is it all going to cost?
Mm-hmm. I had a case where it had nothing to do with theft, break-in, or fire. It was a newer building with fire sprinklers inside. And every now and then, these sprinklers, if they were not designed properly or it was a bad installation or whatever the case is, they may burst, break, whatever happens, and now you have water just blasting out.
Right.
And this is going to flood your apartment, ruin your electronics, etc. So we had a case where it was a fire sprinkler that just burst and water starts coming out and flooding up the living room and ruining all these different electronics. And so we got it fixed, but the tenant came back and said, hey, I lost probably $8,000 worth of furniture, equipment, and everything, and I would like the owner to reimburse me. And we told him, look, the owner's policy is not going to cover your personal property. That just doesn't cover it. But you have renter's insurance. We require renter's insurance. You have it. Contact your policy. He contacted the policy. They covered everything. They asked us for documents and proof and this and that. We had photos. We had invoices from the actual fire sprinkler in the fire department. We had all the notes. So with that, insurance company covered it and basically wrote him a check.
Yeah, that's regardless of what the case may be. If your personal property was destroyed, it's going to be covered, whether it's sprinkler, fire, theft. So those are the key pieces that's covered in a renter's policy for the renter.
Mm-hmm. Now, for the renter, they should have renter insurance for the various reasons we just mentioned. Now, for the landlord, though, I mean, yes, it's a benefit to make sure you don't have to worry about their personal belongings in case of some unnatural event, right?
Correct.
But how does it benefit the landlord when it comes to property damage?
Sure. So part of renter's insurance is liability. So traditionally, 100,000 is adequate. Some property owners require higher coverages, depending on the company. They offer whether it's 300,000, 500,000 for liability. So what that can cover is, let me give you an example. I had a client who was making some popcorn. So she stuck some popcorn in the microwave, and she made a phone call, stepped outside, but I guess she didn't put the timer on, and she just turned it on, and when she came back, she saw smoke everywhere, and she smelled smoke for days, she said. But she showed me some pictures, and the cabinets right above were blackened, the ceiling was blackened, and those things cost money. So good thing it wasn't that bad, but it covered for all those pieces to get repaired.
Mm-hmm.
And naturally it was all taken care of. So that's an example right there. Another example, it was a funny situation, but same thing. People get distracted by their phone. So had this other person, I guess they were doing some type of bubble bath or whatnot, and they lived on the, I think, 3rd or 2nd floor. So they turned on the faucet in the bathtub. Phone rang, took the phone call, forgot all about the faucet being on, came back to a flooded apartment. And it actually was...
Did the water go into the units below?
It did. It went down to the unit right below, so it naturally destroyed the carpet, and it sank through the floor and went to the ceiling of the unit right below.
Wow.
And it paid out, I think it was like $50,000-$60,000 in payout. So just kind of give you an example of what I've seen so far.
Mm-hmm. Now, one thing that we require renter's insurance policy listing all the tenant names along with our company listed as additional insured. Now, the one conversation you and I had a while back was very interesting because let's say it's a group of 4 friends that are going to rent an apartment. Right. They can get one policy under all their names, or they can each individually get their own policy.
Right.
But we had a very interesting conversation because if everyone had their name on one policy and someone had to file a claim because of one individual, let's say one of the 4, caused something to be damaged and a claim had to be filed,
correct,
that now stays on the history of the 3 other individuals.
That is correct. So the other alternative really is to set up a policy individually for yourself. So in terms of cost, it will be more because naturally you're having your own policy. And if there are 4 people, if, for example, the cost was $100 for one policy, you can add all 4 people on that one policy. And instead you say, well, let me make sure that I protect myself in terms of my track record, but let me get my own policy. So if you decide, hey, every roommate has their own coverage, that's $100 per person. So at the end of the day, you make that decision, what's going to be best for you.
Yeah.
Yeah.
But, yeah, and right now I see a lot of, especially here in the Bay Area, we see a lot of individual friends moving in together, especially closer to BART and colleges. You know, because they'll just take BART into the city or to Berkeley University or some other college. And so you see a lot of younger people that are moving in together as roommates, but they'll get one policy that covers all of them. But the danger, of course, is, as we said, if one person has to file a claim, it affects everyone.
That is correct.
Yeah. Okay, so is there anything else that renter's insurance covers beside liability and personal property?
Yes, it does have coverage for loss of use. So what that means is like those situations I mentioned where it had to get fixed, the place that you're living in, so it's inhabitable. And let's say it was an apartment building and it was at 100% occupancy. Well, you still got to live somewhere else. Meanwhile, while the place is getting fixed, so it basically pays for living expenses, whether you got to stay at a hotel or maybe get a separate apartment for a month term. So that's what it would potentially cover. In addition to that, medical expenses for a situation where you invited someone over, or maybe someone was around your property and they tripped, fell, maybe got hurt, had to go to ER, pays for their ER copay.
Okay.
Yeah.
Yeah. So I think every landlord should just require blanket policy, just require renter's insurance on older units because, I mean, there's a lot of benefits and protections for both the tenant and landlord.
Correct. Yeah.
Yeah. Now let's talk about homeowner insurance. And I have a lot of people that come to me. They say, Mark, I want to rent out my property. I always ask them, have you talked to your insurance agent already? Because there's a difference between a homeowner's policy and a landlord policy.
Correct.
So why don't you break down the difference?
Sure. So now renter's insurance and home insurance is pretty similar. So what a home policy really will have is it has coverage for the structure. Now, obviously, the structure is the structure whether you live in it as an owner or have it as an investment property. But the exposures are a little bit different when you have a tenant or you rent out the property. So from what I've seen in the past, talking to a few different types of clients, some clients don't really know and understand what the differences are. So really simple breakdown is risk and liability exposures. So one thing you want to be mindful of is that, you know, you're letting others live in that space. So you want to make sure you have the right coverage in place. So now being a owner, if you occupy it for yourself, it's one thing. But again, when you're letting someone else in another family occupy the space, now you're a landlord. So again, you want to make sure you have a landlord policy. It has a few additional benefits. But
one of them is loss to lease, right?
Loss of rents.
Loss of rents.
Yes. So what you want to make sure of is that, again, it's structured correctly, because if there was a fire, water damage, or something happened where it was inhabitable, who's going to pay the mortgage?
Mm-hmm.
Potentially your insurance company, because it's generating no income, so therefore you have loss of rents coverage. That's what the difference is between a landlord policy and a homeowner's policy, is that piece, mainly.
Okay. Now, commercial insurance. Let's jump into that.
Sure.
I manage some commercial properties. What should landlords look for in their commercial policy?
So in a commercial policy, it's really not a one-size-fits-all, because commercial is such a large spectrum. You can go from a smaller type of building, for example, in the property world. You can go from like a 1-unit, 2-unit, all the way to endless amount of units. So say a 300-unit complex, it would probably have a few different nuances that you would want to add on, such as backup and water coverage. If like sewage came out, you want to make sure if any destruction was done by that, you have the coverages in place. And you probably have more glass, for example, so a lot more windows, so you want to make sure you have coverages for that piece, for example. So with commercial insurance, it's not a one-size-fits-all. So you can
now what about in office retail space? Does the insurance company take into account the type of tenants that are present?
So there's loss of rents regardless if it's office or habitational, or I should call people that's living in it with multifamily. But what you want to do is talk to an expert that is very familiar with that industry and seasoned, so that way they can give you the right recommendations to make sure you have all angles covered. Because again, with commercial insurance, you can go from small business to large business, and large businesses have different exposures than smaller businesses.
Mm-hmm.
Yeah.
Okay. So one thing that's interesting in the news are all the electric scooters that people are driving around sharing, and
Yeah.
and I guess just leaving it all around the cities like San Francisco, Berkeley, and Oakland. So from an insurance perspective, what do you think about these? Because if someone can just pick them up on any property and they leave them anywhere, a kid jumps onto it, slips, falls because they're messing around with it, and it's on your property. I mean, from an insurance perspective, is this a big worry, or what's going on?
Sure. So I love those excuse me. Love those little scooters. I actually have one. So I have an electric scooter. It's kind of like that Limer bird scooter.
Mm-hmm.
But and that's the reason I'm glad you point that out, because my kids have these scooters, and I always tell them, don't let your neighbor friends or your friends ride this thing, because if they get hurt, guess who's on the hook? I am. So I always emphasize to them, these are great toys, but don't let your friends or our neighbors' friends or their kids use them, because, again, something happens. They slip, they crack their head or something like that. I'm on the hook. So
you have to get a thumbprint reader on them.
Yeah, right. So there's not very many types of insurances available for the smaller recreational vehicles, such as these Razor types of scooters. Obviously, there's insurance available for like mopeds, sometimes GoPeds, which are motorized larger vehicles, which look like motorcycles. But for these smaller, toys, I call them, there's no insurance available like a motorcycle policy. So if you're planning to ride it around in a metropolitan city, whether it be San Francisco, Oakland, or Concord or whatnot, and you're riding it downtown and you knock someone over and they get hurt, there's really not a policy available for that, and I wish there was. However, now if you're riding around your house, that little type of scooter, it could potentially be included in your homeowner's policy if you're covered.
Now, from a landlord perspective, let's say you rent out a single-family home.
Right.
Would it make sense to have some kind of special addendum to the lease agreement that prevents people from having these type of scooters? And where I'm kind of going with this is I also want to bring trampolines into the mix.
Got it. That's a big no-no, trampolines.
Yeah. So I've ran into a lot of insurance companies that will inspect the property. The tenant has a trampoline, and they tell them absolutely no, that's got to go, right? And then we work with the tenant gets rid of it. Or they come back. I've had, I think, one or two insurance companies say, yeah, we don't care about trampolines, which actually kind of surprised me because none of these trampolines had any security net.
Wow.
And then there's another insurance company that said, we're okay with trampolines as long as there's some kind of security net. And where I think insurance companies are concerned is, well, if someone's enjoying the trampoline, having fun, they jump and fall off of it and hit the ground pretty hard, you could have some major damage. So from a landlord point of view, should they just ban these entirely from their property?
Well, I think just like yourself there, when it comes to trampolines, they're just a big issue in terms of really people getting hurt using them, and naturally the people are going to use them that are kids. So typically kids under 15, upwards of 2, maybe even a 1-year-old may want to use it. So if someone's bouncing on this thing and there's no security net and they land on their neck, what could happen? It's something that we wouldn't want to experience, whether it's our own kids or neighbors' kids, niece, nephew. It could potentially be fatality. I mean, you crack your neck or like you get paralyzed. can you imagine if that was your child and then it happened on someone else's premises? What are you going to do? You're going to go after that person.
Mm-hmm.
So if you flip that situation around, what makes more sense?
Mm-hmm.
But, some people are just going to go for it, and they're risk takers, and they're going to have a trampoline. I do know certain insurance companies don't like trampolines, and if there was a trampoline claim, it's excluded. I haven't seen any insurance carriers that are okay with it, but they'll exclude it from what I've seen.
Okay. Yeah, we had a few insurance companies where where they just came out and say, "Hey, look, trampoline cannot even be on site." It wasn't even. They didn't even say they would exclude it. They just said, "We don't want this on site." Period. And so we had to have it removed.
Got it.
Yeah. So that's pretty common then.
Yeah.
Okay.
I've been in the industry for a few years, and I've seen most of these insurance companies. They're okay with it being there, but if there was a claim that came out of it, it's excluded.
Mm-hmm.
Now, I have seen other insurance carriers where, like you said, if they see it, they'll just send a notice of cancellation because that's just part of their business practices. Is they don't want that type of risk exposure, so you got to find another company to go with if you want to keep that trampoline.
Okay. So landlord policy would cover if someone got hurt on the property. Is that correct? Or no?
Yes or no. So it all depends on the insurance company. So
Okay.
the insurance company can pretty much outline what's covered, what's not covered, and again, kind of circling back, most consumers don't really read these big 500-page contracts, or it's an exaggeration, but usually they're about 50 to 100 pages.
Mm-hmm.
Most people just put it to the side, and they only look at how much it costs and pay the bill and move on with their lives.
It's a little hard to read 100 pages when the font size is like 5.
Right.
Yeah, but yeah, I mean, reading through insurance, I mean, that's putting yourself to sleep. But it's important, and that's why everyone should really sit down with their insurance agent and find out exactly what is and isn't covered. Because if someone gets hurt and your policy covers it, great. But if your policy doesn't cover it, you're screwed.
Right.
But then that's also another reason why you want your renter to have renter's insurance, because it covers tenant liability.
Correct. Right.
Yeah. Now, the tenant liability, would that cover if someone got hurt on the property, or does that just fall under the medical portion of renter's insurance?
So all liability is covered for a renter's policy. Again, the standard form is $100,000 in coverage.
Mm-hmm.
You can bump it up if someone, being a property manager, if someone was renting out an apartment, probably smaller exposure than if someone was renting out a single family residence. If they got that big backyard, big side where they can put stuff and hazards or what have you, then I would have a higher limit of liability that's covered, especially if you're going to have more exposure.
Yeah.
Now,
have you looked into the Rent Relief Act that Kamala Harris has kind of put out there?
I got a little bit of the gist of what they're trying to do. It's kind of like a tax credit, or it's kind of like being a homeowner in a sense, where you get a write-off.
Yeah, so basically for low income, I believe it's low, very low, possibly even medium income, if you pay over 30% of your income in rent, they'll reimburse you, or basically give you a tax credit for that, for anything above the 30% mark.
The excess, right?
The excess, yeah. So, I mean, what do you think about that? I mean, I've had a few guests on Highest and Best here the last couple months. We've talked about it. The general consensus is it's a temporary fix, but I wanted to get your take on it.
Sure. I mean, my personal opinion on this is it really will not do much here in the Bay Area, because from what I've seen, there was a cap on income. If you make more than $100,000 in income, then you don't qualify for that Rent Relief Act. And if you live in the San Francisco Bay Area, you're probably making around $100,000, so you're not going to see any benefit.
Now, do you know if that cap is individually or per household?
That's individually.
Individually.
Yeah.
So actually a lot of people might be able to qualify that if it's really individually, because the median household income right now is $110,000. Well, that's household income. So if you have 2 or 3 people living there, they would each qualify for it. But then,
Well, would it go by how much your share for rent is, or by your overall rent for the whole house?
but see, and that's a good question, because how do you know what the split,
I guess
or
this is
how
put on the
everyone splits
lease, right?
Yeah, I mean, I guess, how would you regulate that? Because if, let's say, you're in a house and you share with 2 other people, right?
Yeah.
And what if everyone claims a little bit higher rent or lower rent in order to get a higher tax credit? Whatever, you manipulate the numbers. How are they going to regulate that? I don't understand how. That just seems like too much work. Maybe, I mean, do we know? Is that something?
Maybe there's an application system.
Yeah, there's got to be. Yeah, we'll have to look into that a little bit more. But I would imagine it's got to be on household. That would make it very easy, because then they can track everyone in the household that's supplying tax returns.
Well, your luck. I actually just popped it up on the search engine here, and I got the proposed bill up. So it's going to go through some stages. It's just introduced, so it's just an idea at this point. So from what I see here, let's read it together. It says the amount of the credit ranges from 25 to 100% of the excess rent. So the key word there is the excess rent, depending on the gross income of the taxpayer. So the credit is not available for taxpayers with gross income that exceeds $100,000. $125,000 for a taxpayer whose principal residence is located in a high-cost area, as defined by the bill.
Wow.
So
it sounds like they're going off the taxpayer, so the individual person. They're not going off of household.
Yeah. So again, the credit is not available for taxpayers with gross income that exceeds $100,000. So if you
the median income right now in the Bay Area is $110,000, but that's household.
Right. So if, for example, me and my wife, let's say we filed taxes together, and this is me more assuming, because this is just an introduction to the bill, and we're way far ahead, or before this even goes into play. I'm just kind of thinking in my head, okay, so if I filed together and I made, like you said, if I'm doing, say, 100,000 together, me and my wife, then if I'm renting, I don't qualify, right?
But if they're saying off the taxpayer, so I guess that would then motivate some people to file individually, even if they're married, possibly.
Yeah, well,
because if, let's say, you and your wife are making 60 each, and then file individually, you could then take advantage of the credits then, as opposed to filing jointly at 120.
Yeah, but you want to take a look at which way you're going to get more deductions if you're self-employed, or if you're working for a firm, or your W-2. You want to see which one is a better play for you in terms of getting that better or bigger return.
Mm-hmm. Yeah, where I can see it being a bit of a mess for them to track this would be, especially here in the Bay Area, you have a lot of people, and I've mentioned this a couple times, is you may have 2 or 3 or 4 friends or 2 couples that will move in together, right? And then they split the rent. And that's what a lot of households right now in the Bay Area are doing. And so if you do that, who's claiming how much they pay in rent? How are they putting that on their taxes? And if, let's say, each individual, let's say there's 4 people that move into a house together, right? Each one makes $40,000 a year, right? And then collectively their rent is $2,200, and they all split it equally. But on their taxes, they modify it in a way where they can take advantage of these tax credits and get reimbursements. Who's who's overseeing this? Who's verifying that that is what they pay? I mean, I think it just opens up the way it's written up right now. It just kind of opens itself up to a lot of abuse.
Yeah, I can definitely see where you're coming from, but I'm sure they're going to create a separate department that will audit naturally these type of abuses.
But see, that would be that would be though the IRS, because the IRS would be in charge of this, and the IRS is really low funded, and they don't have enough people to audit. I mean, and when they audit, they're trying to audit people that they know they can get money back from. You know, that's their main goal. They're not going to audit someone where, okay, we're going to collect an extra $50 from you, or $100 or $200.
Yeah.
They're not going to waste their time on that, but they're going to spend their time to see if they can get 10 grand, 20 grand, $1 million for higher net people.
Sure.
That's what. Yeah, I mean, I just. Yeah, it seems like a really nice system. Nice rent relief act is a great name to it.
Sure.
And it's really just a temporary fix for, housing costs. I mean, housing costs are high in many areas, but it's mainly in metropolitan areas where there's a lot of high demand for people to live there.
Yeah. Well, if it stimulates spending or, local economies, that'd be great. That's what I can see. This would definitely benefit is more money for you to spend on other things.
Mm-hmm. Now, Governor Jerry Brown recently announced that he predicts there's going to be some kind of recession here in the U.S. economy sometime in the next 2 years. From an insurance, well, I mean, first of all, what's your take on that? And then from an insurance perspective, what can some people do to prepare for that if there is a recession? And especially with the fires, it seems like the fires are happening every single summer. So if a recession happens in 2 years and then a fire happens, what should people be preparing for from an insurance perspective?
That's a challenging question there because really, how can you prepare for a recession? And at the end of the day, every person really has to have that prep mentality. So some people prep for, the zombie apocalypse. Some people
building bunkers with 2 years worth of canned food.
Exactly. Some people prep for, camping. Some people prep for retirement, right? So what's the difference in prepping for a recession? It's just all about saving. And the economy you can't really control. I mean, which one of us has the crystal ball on when that's going to happen? None of us. We've all ridden some recessions in the past, and we all got through it. We're here, right? Mm-hmm. We're living in a good time, but simply everyone just has to, really make sure they are mindful and have that savings to prepare for anything, whether, hey, you lost your job or maybe...
So where I'm kind of going with this question is during a recession, for many people that get hit in the recession, it becomes a lot tougher to save up money, or they start dipping into savings, right?
Right.
So from insurance, let's say that's happening, and let's say a fire hits their home and it has to be rebuilt. The insurance policy is going to cover based on cost to rebuild, right?
Correct.
Now, a lot of people also don't have proper coverage for that, correct?
Some people...
That tends to be
it tends to be the case. Now, there's a lot of different insurance companies out there. There's a lot of different insurance brokers, a lot of insurance agents, and I get it. They're people. So simply the consumer has to really be mindful of, hey, this is my investment. This is how much I put into it. I've worked hard for it. You really got to ask yourself, am I properly covered for it? Because really, something goes down, who's going to take ownership of what happened? You are. Mm-hmm. So simply, you got to make sure that you take a look at those notifications, those mailers that are, big, thick booklets. You got to read through it. Because if you don't know, You don't know. And if something happened, you had a fire, how do you know how much you're going to be covered for?
So in case of fire, would it be smart for someone to once a year review their policy and make sure that that policy gets adjusted for the current cost of construction?
Yeah, so, let's make this simple for someone to kind of grasp in terms of the listeners, right? So nowadays, the cost of labor is going up. So, labor costs, doesn't matter where it is in California or wherever it is in the city, minimum wage has gone up, right? So what that means is the cost of everything is going up because it's being passed down to everyone else. So if you're paying someone to build a house, for example, all right, so you have a team of general contractors. So if the labor costs went up for California or the city specifically or the region, then guess what? Those contractors are going to charge more to build that house. How much more? Well, how much time are they going to spend on that house? Now, with all these trade wars as well, the cost of material is going up. So, we get certain materials from certain places, whether it's wood, steel, and if the cost of those goods went up, there's taxes, tariffs on those goods. How much is it going to cost to build that same house if the material went up and the cost of labor went up? Well, guess what? The general contractor is going to pass that cost down to the person who needs to have it built, whether it's the homeowner or it doesn't matter if the insurance company is paying for that bill. They're going to charge more for that bill, but the insurance company is only going to pay so much based on the contract, and the contract is also known as your policy. So if you don't read your policy, how are you going to know if there was a fire tomorrow how much the insurance company is going to pay out to get that house built to pay that contractor?
Mm-hmm.
Hopefully that kind of made some sense.
Yeah.
So kind of give you some easy math here. So I know this is really unrealistic, but let's just say 100,000 was your coverage on your policy, right? For that home. I'm just throwing out a round easy number for people to kind of understand.
Well, if you go outside of the Bay Area and really outside of California, there's a lot of people that 100,000 is the average home price.
True. I'm just trying to make the math easy to understand.
Yeah.
So if your insurance policy says, hey, you're covered for 100,000, but let's just say you did a reconstruction cost estimator and it cost, say, 100,000 in material, and then the labor was, say, another 100,000, and then the cost of material and labor went up, what's going to happen? You're screwed. All because you didn't read your policy and you chose, hey, maybe you chose the route where you wanted to get the less expensive insurance policy because this insurance company offered you a cheaper cost, but they didn't tell you how much they're covering.
Mm-hmm.
So that's what I've seen is the disconnect. People are shopping price, but don't realize you work hard for this thing that you have or you're insuring. So you should be smart and shop coverage because at the end of the day, you get what you pay for.
Mm-hmm. Do insurance agents advise on additional coverage every year when it renews, or is that something that most insurance agents don't do?
Well, again, insurance agents are people, whether you're a property manager, real estate agent, or restaurateur. I mean, at the end of the day, you're dealing with a person, and people have different experiences. Some people are more seasoned than others. Some are a little bit more mindful in other surrounding categories. So you really have to go with someone who you feel confident in protecting whatever it is you're insuring. So whether it's a single building, single family home that you live in and it's your primary residence, or maybe it's a 100-unit apartment building, do you have that confidence in knowing that you're getting the right advice, or maybe Are they properly reviewing your personal exposures or your personal, just overall story? Because everyone has a story, and not everyone's story is the same. So you want to make sure that you have a person you can kind of give those tidbits to and get some feedback as to, hey, what do you think? Is this a good policy in terms of what I mentioned for you? And they're going to give you some suggestions. But at the end of the day, you consume those suggestions and you pull the trigger on which route you want to go with. So again, you have the ability to shop price, or you have the ability to shop coverage. And just like anything else, whether it's you're shopping at, hate to say these names, but Walmart or Nordstrom, you get what you pay for.
Yeah.
Yeah.
So this is a little bit off topic off of property insurance, but it's a little bit different type of insurance. But I know the news came out today. I don't know if he signed it in today or yesterday, but Governor Brown just signed, I think it's SB 10, but basically ending the bail bond industry here in California as of October 2019.
That's an interesting piece there. I saw the news and I heard a little bit about it, but I was just thinking to myself, why?
Well, what I saw is it puts a lot of power in the judges. They can decide whether you are put in on bail or not, and it excludes people who are being tried for serious crimes like murder, domestic abuse, serious stuff. This is more to keep people who get busted for stealing stuff from a convenience store or.
So John Oliver, you know John Oliver?
No.
He was on the Daily Show as a correspondent, and now he has his own show. He's had his own show for a couple of years now. Last week tonight on HBO.
Yeah.
He did a great 25-minute segment on this about the bail bond industry and how it's all based on insurance profits, right?
Right.
And how it really, and what happens is you end up with a lot of nonviolent misdemeanor offenders that don't have the financial means or the assets to post bail, get out. Even if, they go to a bail bondsman and it's, you need 10% cash, right? They still can't afford that. And so what happens is you have a lot of people, whether they're innocent or guilty, in jail waiting for trial because they cannot afford to get out.
That makes sense.
Yeah, so and how this is going to be reformed is that basically there's going to be three categories. You have a low risk, medium risk, and high risk, right? Obviously, if you're low risk, nonviolent misdemeanors, there's no bail. Well, there's going to be no bail, but you can go home. You're released within 12 hours after you're detained, right? Or
Got it.
after 12 hours after you're booked. So nonviolent misdemeanors, you're free to go. If you're medium risk, and this could be, more aggressive misdemeanors, or it could be maybe nonviolent felonies, right?
Yep.
If you're not really considered a flight risk, you're considered medium risk, then it's up to the judges and the local county jurisdictions to then decide how they want to handle you. So there may be some counties that are stricter than others.
There's probably going to be some monitoring, too. So
Well, exactly.
They'll let you out without bail, but you get to have a nice little ankle bracelet.
Correct.
As a souvenir.
Correct.
There you go.
And the argument is that there's enough technology nowadays to where we can keep track of people. There's an ankle monitor, there's weekly check-ins, and they can then decide how much of a risk you are in the medium risk level, and then they can assign what they think is appropriate. Now, if you're high risk, there's absolutely no way you're going to be let out of jail. And that's the way it is right now. If you're high risk anyway, you don't even get bail.
Yeah.
So if you watch John Oliver's summary, great way how he breaks down the entire business and how it works and the problems with the business. But over the years, there's been so many documentaries that showcase how low income people and even medium income people get caught up in the system. I mean, and there's a certain percentage of people that are innocent that are then exonerated later through additional evidence. And because they could not post bail, they're stuck sitting in jail for months, for years, depending on the case. And then they finally get exonerated and they come out. But I mean, can you imagine like a year in jail for something you didn't do. It might have been bad timing or whatever. Or there's still people in jail because of marijuana. Like,
Yeah.
it's legal now, yet people are still in jail because they got caught on a misdemeanor. Like,
Yeah, no, I get where it makes sense, but the part that that doesn't make sense is obviously this is going to put bail bonds companies out of business, and obviously they have families to feed too. So it's one of those things, you know, it's a double-edged sword.
yeah, and that entire industry is going to go out. But, you know, I mean, if you look at the number of people that are not going to be sitting in jail, taxpayers are going to save a ton of money there, because you're not going to have these people sitting in jail having to be fed, having to be cared for, simply because they're waiting for trial for a small misdemeanor or something that they were innocent for, but they just can't bail themselves out, right?
Yeah.
It's going to save a lot of taxpayer money. But, yeah, I mean, there's a lot of people in the bail industry that are now going to lose their job. But you could also argue the same with coal mining, right?
Yeah.
It's like, yeah, there's newer technology now. Should we save an industry just because, like a dying industry, something that's failed, something that's proven to not work anymore? Should we just hold on to that to save people's jobs when we can maybe help them adapt into other industries for work?
Right. No,
You
that
know,
makes
and we're moving the society forward
True.
into a better cause.
Yep. Well, there's only one way to find out is once everything kind of settles in, what's the next part that they got to really put a resolution on? Because, you know, some repeat offenders, maybe they figured out, hey.
Oh, yeah, it's clear under the bill that if you're a repeat offender, you're now put under medium or high risk. And so if you're under high risk, there's no way you're getting out. There's just no way. You can get out on medium risk, but there's going to be certain restrictions like an ankle monitor or weekly check-ins, whatever, depending on the case. If you're low risk, you get out 12 hours after you're booked.
Sure, yeah. My thought process on that is, you know, maybe you may perceive someone as a low risk because they've never gotten caught before, and then all of a sudden they got caught twice for that same thing, and they're like, okay, well, how do we play this system? So that's just my thought process is how do we make sure that there's protection for the public for those people?
Yeah, I mean, if you get caught one time and you're low risk, and then you get caught a second time for the exact same thing, hopefully you've already gone through your first trial where you were innocent or guilty. I think if you go through the trial and you were guilty and you got caught on it again, you're now probably going to be under medium risk, depending on how the local county jurisdiction determines it, right?
Yeah.
But if you're innocent on the first low risk, I think if you have another low risk charge, that they let you go because you were innocent on the first one.
Yeah, well, this is definitely going to be an interesting time.
If you get caught on the same thing twice, and you're
Well,
still...
it could be like a point system, you know, where you start getting X amount of points, and
Yeah.
when your score gets too high, then you have to start getting the ankle monitor or sit
Yeah.
behind bars for a while.
Yeah,
Yeah.
and what's actually good about it is they're going to let the local county jurisdictions determine how they want to do that. So some counties that may be more conservative can place more conservative standards. And then you have more liberal counties that can place more liberal standards. It's up to the counties.
Yeah. Well, this is going to be an interesting time. A lot of changes in the last
October
year.
2019.
Yeah.
Yeah.
Interesting.
So going to be very interesting. So EJ, thanks for coming on to the podcast. This was
Yeah.
a great episode. I already know when I have owners that ask me questions about insurance, I'm just going to send them the link to this episode and just tell them to listen or watch the entire episode, because we really hit all the cover points on insurance that I think every tenant, every landlord, every
Sure.
property owner really needs to know. So I want to thank you for coming on to the podcast. For people that want to contact you, do business, what's the best way for them to reach you?
Oh, well, we're in 2018, so a lot of great ways to leverage technology. I have a Facebook. Obviously, you can text message as well. Give me a call. There's an email. So if anything, I'll pass the contacts, and then they'll be able to download or see my contacts on the site where this is going to be posted, so that way they can have access on any which media platform they want to use.
Yeah, perfect. This is going to go up on iTunes, iHeartRadio, Spotify, Facebook, YouTube, SoundCloud, literally everywhere. This podcast goes everywhere. So
Yeah.
Okay, EJ, thanks for coming on, and we'll be in touch because you're my insurance agent, and we've got some business to handle.
Definitely. And we kind of scratched the surface, I think, on the insurance side of things. There's definitely a lot more layers that, people want to get more insight. They're more than welcome to reach out to me, or maybe they're a local guy that they do business with. But again, you want to make sure you review what's important to you, because you don't want to be placed in that position where it's too late.
Great.
Just want to conclude with that.
Great. Perfect. Thanks.
All right.
Thank you so much for listening to the podcast. Thank you to our producer, Sam Lubin. Please subscribe, like, comment, and share the podcast. Remember, you can listen to the podcast on iTunes, Podbean, iHeartRadio, Google Play, SoundCloud, and anywhere else you listen to podcasts. For more information on my business as a property manager and real estate team, go visit my website at marcguzman.com. I really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.